This is the talk of Music City real estate.
Welcome back to the talk of Music City Real Estate,
where we educate and motivate all things real estate.
My name is Monte Moore with Realty One Group Music City.
Hey, and I'm Carey Ann with CMG Financial and my mortgage team.
Every week we'll be posting a new episode chock full of Nashville real estate value.
Yes, and you can follow along and subscribe at talkmusiccity.com.
Got a question for us? Ask away at questions@talkmusiccity.com.
Monte.
Carey Ann and Mr. Jason Hoover is in the house.
In the house.
Thank you, Jason,
one,
for joining us today.
Oh, it's always a pleasure.
Man, it's an interesting time in the real estate world, isn't it?
It really is.
It's an exciting time, I think. I mean,
I feel like, on a roller coaster, just throw your hands up and let's go.
Let's go.
Scream as loud as you can.
Yeah, so I mean, I saw in Inman today, shout out for Inman. I think it's one of the better resources of information out there. That I noticed this week that Opendoor just shared their numbers, and they had, what was it, like almost $1 billion they lost
almost $1 billion.
That's incredible.
That's
a billion what? Losses?
Lost.
Oh, wow.
Just in the last quarter.
Yeah.
And Offerpad was my favorite, just to be real, and their stock is so low now, they're talking about even pulling it off the stock market.
Yeah, I don't know what they're going to do, but they've got to do something quick because it is it's spiraling out of control.
And the problem, of course, is that when you're buying a house, you're a flipper, you're buying a house, and you're wanting to turn that over in a reasonable amount of time, it's hard to forecast right now. It was hard before because things were going up so fast. Mm-hmm. People forget that if they go up that fast, there might be a quicker adjustment that they've got to hang on to their shorts.
So what did you think on that Redfin CEO, what he said about his theory on it?
I thought that was.
What did he say?
Yeah, I think it's worth probably talking about for a minute because I think there might be some value.
I really do.
To it.
I think he's hit on something.
Yeah.
Basically, what he was saying was that the iBuyers actually played into the overinflation.
Oh.
And so by them now pulling everything out and selling at losses, it's creating this vortex, which is declining all the sales. So they were out buying all the properties, and which was, other people couldn't buy them and paying more. They had cash money. People would rather take a cash offer, right?
Right.
So other people weren't, consumers weren't able to compete as much. And so that inflated all these prices over the last couple of years. Mm-hmm. So his theory is that that's what inflated these prices and got us into this, this market of just craziness. And now with it all shifting, they're losing money. So they are unloading their inventory. And so it's causing this adjustment.
Yeah, that makes sense.
And it really surprised me, though. I'm sure it surprised you to see that was the CEO of Redfin talking like that. I mean, that's like, okay, we caused the problem. I mean, I'd be afraid of getting shot if I did that.
They're an iBuyer?
Yeah.
Redfin?
I mean, in some respects, they are as well. And so that was a surprise, but I think there's probably some truth to that. Yeah. Some of these iBuyers didn't care if they were losing money per transaction,
right? Because
they had the billions behind them.
Well, Zillow was famous for doing that. They were buying it at a loss.
Mm-hmm. Yeah. Well, they probably were trying to follow the Amazon rule.
Right.
Well, lead with the loss,
and
some just to take market share.
Yeah, just to gain market share.
And that's how Redfin did theirs. I mean, I remember 10 years into Redfin's experience, they were still in the red. Mm-hmm. I guess why Redfin or something. I don't know, but but now, now they're one of the top search portals there as far as real estate's concerned, top of mind. But anyhow, I was surprised that they were admitting that kind of but I think they're. I hate to give them that kind of credit on one hand that they're that powerful, but I think the collective fashion. I don't know what the iBuyer portion of the market turned out to be, but I think it was grander than what most people thought. Mm-hmm. I think because a lot of folks didn't understand that if, as an example, Mark Spain had a property on the market. a lot of those Mark Spain properties are owned by Opendoor, or they're Opendoor bought it, so they're shifting them to them, and then with a deal, I guess they get to sell it on the other side or something. I don't know, but my point is, there was a lot of dollars working very collaboratively.
Oh, sure, and I don't think anybody expected the rates to jump the way that it did.
Right.
Meaning, we expected higher rates, but not probably at the fast impulse.
Yeah.
That it kept going. It was like we were on that roller coaster that you referenced.
Yeah.
It was it's still going.
So much
it's
for
still going.
easing into it. It was just like full throttle.
Mm-hmm. And I think that created, some sort of scare tactic and or slow, where education became so important. It still is today. Many of us lead with education. When do you want to look at purchasing real estate where, you're paying overprice at a lower rate, or so-called underprice at a little higher rate, and then utilizing all the features that mortgage companies now are offering, that we're bringing back all the tools from the past, and offering, it's allowing people to really get some amazing options. And again, what goes up has to come down. They can refinance, at a later time. And that's just been the cycle for many of us that have been in the business for as long as we have all been.
Well, it has been. I don't know what the percentage of agents out there. I know let's say a year ago we had 18,000 realtors here in Middle Tennessee. I don't know what that number is now. I got to believe it's maybe a little less than that because things have gotten tougher. But a big percentage, and I don't know if you know what the number is, Jason, I've only been in the business, let's say 3 years or less. They have not seen any other market other than what we just experienced. And so they don't know that a big portion of my life in real estate was, well, you can refinance later on down the road because the rate will change. The rate will come down. Again, we know that when I was started, the rates were at over double what they are right now, but the cost of the house was less than, maybe 10% or 20% of that of it now. But back then, and I haven't heard any rumor of this happening, but back then, you had this thing called a negative AM loan, where you're paying $500 on a $600, principal and interest and tax and insurance deal. So every month you owed $100
That didn't get anybody in trouble. That was an awesome loan. That helped so many people.
I can just imagine it was a group of college students, sitting around, partying. Like, that sounds like a good idea.
Yeah, let's do that. I will owe more every month than owed the month before. But a couple things I wanted to cover today was, one of them, Carey Ann, here we are sitting between Jason and I, one of the most successful business women in Tennessee. Okay, that's just reality, right? I mean, am I right or am I right? I think I'm right.
Yes or yes.
I think he's warming up for a Christmas present or something here. I don't know what's happening.
No, but seriously, I think that if anybody watching this right now could tap into your, you, as far as the wisdom, the experience, the ability to pivot, the ability to kind of foresee the market, that part. And we wanted to talk about an article we saw on Inman said the 8 hard-learned money lessons from a housing adjustment. Okay.
Yeah.
I think those are important as well.
We talked about, weathering the storm of some sort. I think the quote that comes back to me is, "A smooth sea never made a skilled sailor." I think that's a great quote to really think about. These are the times right now that allow us to grow as individuals, allow us to grow as business owners, allow us to choose to gain market share if we want. These are choices, right? So we can lead in being scared, or we can lead with a little bit of confidence, but understand that we're all, the 3 of us here, are still dealing with the same things that every person does. We wake up the same way, going, "Oh, what's today going to bring? What's the market going to do, today?" And you just have to think different, act different, and continue to raise the bar on your own personal stance. I think I love what Jason and I talk about a lot is, this is the time to decide if we're just going to be interested in our business or really truly committed to it. And if you're truly committed to it, you're going to do all the things that other people are not. I mean, I'm telling you, I'm doing things that I'd never done before, and I'm searching and creating and meeting new, and I'm driving further than I've ever driven, to spots that possibly have opportunity. And so this is the time to be as creative as you want to be in a compliant manner, but you're preparing yourself and you're hanging on for something brighter, tomorrow. And that's what I'm doing.
The market's hard. I was sharing that with some folks that we're onboarding today. Look, let's just go ahead and get this out of the way. The market's tough right now, but choose your toughness. Okay, you can go get a job that's tough, or you can do real estate, which is tough. We just left a tough market. I don't know about you, but the last 2 years, it was
different
tough. It was a different kind of tough.
Y'all didn't like me then. Y'all didn't like finance.
Everybody was playing cash. Where in the hell all the cash
They're
come
from? Mortgages.
Now
3 X's.
Yeah, now the mortgages are important, and
I know. Put me back in, coach. What's the saying? Put me in, coach.
Yeah. So anyhow, we can choose our tough. And I've been here. I'm a living proof that throw it at us. Come on, life. We'll throw it at us. We're going to figure out and become better for it. Because the thing about it is, it seems like prosperity follows value. You want to make more, you become more, and you become more by putting yourself at the deep end of the pool and figuring out how to get to the other end.
If anybody thought that the real estate market or the mortgage market was easy, I mean, I do think people looked at us and thought it was easy.
Yeah.
Like you, Mr. Data Queen over here. I had so many queens in my last thing. But King, he's like the man, and you make it look so easy. I'm closing loans so fast and with my eyes closed, 30 something years in the business. Well, clearly you would still be doing it you wouldn't be doing it if it was hard type of thing, right?
Yeah.
This is not an easy industry to be in. I mean, it comes with dirt under your fingernails. It comes with us not working smarter. It's working harder and smarter today. It's just what it comes with. If you're not getting up, planning the work and working the plan, I mean, I don't know what tomorrow's going to bring.
I think part of the difference now is, people... it was hard, but there was hard because you were hanging on to the buyer and but they had this thing called motivation. They had this thing of fear of loss, and now you take that fear of loss away, and now suddenly it's a whole nother skill set that you have to start building, and it's totally different than what it was before. It's no longer just hanging on to the buyer. Now it's getting the buyer to make a decision because you understand financing enough to put down a plan with your local finance expert that makes sense today, because because today they're probably paying for a ribbon, as an example, to close on it with cash if you need to get competitive. They're probably paying all the closing costs. They're probably paying a buy down. They're doing all these things now that they weren't 6 months ago.
Oh, and just to think how fast it shifted.
Very quick.
So shift. My business partner, they had to purchase something basically with their eyes shut and offer all these crazy incentives and never got their house for 10 full months, finally have the home, and now all of these surprises are coming up left and right, and had to offer cash, and, just life has changed so much. And it's actually coming back to where, yes, we were so busy and chaotic for so many years, but if you roll back the tape where people actually had a first showing, a second showing, possibly a third showing, we're starting to see that more, right? We actually have time to breathe. And if we have time to breathe, we as true professionals should go back to the true professional method of getting clients pre-approved prior, actually approved prior, right? So you're actually walking into, true confidence. I will tell you, and I'm okay with this because it keeps me busy right now, but there's more and more transactions that are crossing my desk with help me, oh my, and it's still happening to this day. And so every transaction means the most for the buyer and the seller, because there is somebody interested in that property. To just recently, tomorrow we closed a loan that got denied less than 8 days ago, and they're about to have a baby, and all the things to find out that they were going to lose their first home with a little one on their way is just devastating, and then the text messages are like, I don't know if you can help, but you're our last chance. Is there any way you can just glance at it? Absolutely. And then we glance at it and we take a no to a yes. Is that special powers? No, but I'm telling you that there's more and more that is happening. Another $1 million deal called me yesterday and got point blank denied because they're retiring. Common sense says they're actually going to be fine. They're putting 50% down on $1 million deal. Like there should be some positives there. We're starting to see it more and more. So creating that confidence with each transaction is so important right now than ever, I think.
Yeah, I just don't understand. Carey Ann, I'm sorry, but probably be negative for a second here. I just don't understand why folks are not dealing with people that don't get everybody to the finish line. I don't understand that.
Well, I think sometimes, and you can appreciate, all of us can appreciate that you finally have a buyer in today's market, and that buyer is working with a lender that you actually know of. The name is familiar. You can Google them, you see them, but you don't know the rest of the story. That's the hard thing with being real estate agents. You see the cover, you see this part, you don't see the rest of the story, of making sure that all the T's are crossed and I's dotted and all the things. So it's a little harder, and we're blessed that many of us come to us first, but I'm also grateful that people know that they can call, because we want to help so many deserving buyers become homeowners, especially today. They're getting a great deal, on real estate. And yes, their interest rate's a little bit higher, but guess what? That house, the amazing house that they found, can be refinanced, like you were referencing later.
So, Jason, let's talk about this Inman article, 8 hard-learned money lessons from housing adjustment survivors. Okay. I'm one of those survivors from the last downturn of a market, and it was tough at times. I'm glad to be alive and well in the market, and but there's I think some great ideas here. So let's touch on these real quickly as quick reminders for everybody who's watching right now. Okay.
What do you got?
Well, let's just jump into any of these. The one thing I do, this is. We think it's simple, but it's not. It's or simple to do, but it's not for most people. It's like, don't live off your credit cards. I saw on the local news station the other day that this Middle Tennessee area, I believe it's this Middle Tennessee, it was somewhere local, that it was over 30% of the people were living in credit card debt. Like they were only they were maxed out on their credit cards. They were only hitting or paying their minimum. It's all they could afford. That's a third of the population here.
Wow.
So, and a lot of those credit cards are variable, right? They're high interest. So how are you ever going to get out of debt? So that's one of the things that, we were focused on, is just getting out of the short-term debt. We just didn't want it. So we buckled up, and that's where I shared, I couldn't remember it last time, the name of the software, but it was Simplify.
Okay.
Fantastic, dirt cheap software for your personal income. You can really see what you spend your money on. From there, you can adjust. And that's when we got serious about paying off of our debt, and I was able to take the data and look and see where we were spending too much or where we could cut back. It was a game changer. It really was. So, don't live off your credit cards. Don't be credit card rich.
And then the flip side of that, though, is now how do you expect me to live? Right? So, that's the hard part.
Well, go ahead.
Well, and that's the thing is that it's not me, but you're wanting to keep a certain level of lifestyle, but that level of lifestyle is so volatile that, it's a house of cards. It will fall. And this even goes into being over leveraged. You don't want to be, house poor.
Right.
And you need to enjoy life, right? But it's, honestly, I can go into a story on this, but honestly, if you are serious about getting out of debt, then lower your level of lifestyle. We did that. We were making really good money, doing well. We were both professionals in different careers, and we weren't happy. And so we had to adjust our lifestyle greatly. Well, I'll just be honest. We sold everything and moved in with my parents. And because we were that serious, we're like, and I tell you what, that's a tough pill to swallow. Being the the provider of the family, and then you're having to move them in with your parents. But at the same time, it was like, okay, I'm doing this so that down the road I can give my family a better life.
Absolutely. I think where I was headed is we have to make hard decisions, you know, and sometimes we don't want to change our lifestyle. And that is going to force us to possibly, if we don't have the closings today, to jump onto the credit cards, and like you said, they can easily snowball. We see it with credit all the time. And it gets out of control. I mean, short-term interest rates are quite expensive, right? Credit cards are quite expensive, and so as we navigate into this new world and new market, thinking about how to adjust your savings, right? There's money, there's play money, and there's savings money, and there's tax money, right? You all put money away to pay the taxes too. But having that little bit of a nest egg, I know people that live paycheck to paycheck and live the best life, you know, and I'm so blessed. My mom would always steal, she was doing this on purpose, but would take 50% of my money from babysitting to serving to whatever. And I was thinking, how dare you? But then I learned that process, and I still do that today, you know, and put money aside, because if I see it, I'm going to spend it, you know.
Well, we did that with our daughter growing up, and she was able to pay, and we made a deal with her that we, you know, whatever money you put up for the car, we'll pay, you know, we'll match it.
Love it.
And that's what she did. You know, she saved from the babysitting, from her, you know, she did the princess things, and she did acting.
Yeah.
So, you know, she saved, I mean, we gave her some, we helped her budget that where she could go spend it. But yeah, I mean, you got to change, I mean, you got to teach kids, you know, early. Rather than late. Yeah. But also too, you know, thinking on the financial side, you know, the maxed out credit cards hurts their DTI.
Oh, huge. Yeah.
And so that's going to hurt, or debt to income. Sorry. That's going to hurt them when they want to go buy a house. And doesn't that also equate to a higher interest rate?
Yeah. I mean, if you max out your credit cards, your credit score will adjust, right? And then that's going to change, you know, that interest rate. And certain programs only allow for certain debt to income ratios and different things like that. So, you know, and kind of just setting ourselves up for true success. And again, possibly we're in a situation where we can't get out of right at the moment, but tomorrow is a new day.
Right.
And so knowing that you've already gone through this once or twice, I had to move into a rental of mine because I couldn't rent out one of the houses, and then I knew I could rent out a different house that I owned. So I was just at the time going back to a previous market, just trying to stay afloat. I was younger in my career, and I didn't want, you know, to have to go under fully, you know, and just trying to shift the lifestyle, how to move our family somewhere else where we didn't fit, you know, and how to make some changes, you know, and all the things. So we can do that, but definitely reorganizing ourselves.
I did see where you can buy a condo down in Santa Marta, Columbia, for about $100,000.
Okay.
So if it gets too bad, we may just head out.
We're out of Dodge. We're dropping the mic.
So in the last downturn, I remember the painful day that I had to make a decision. Do I make my mortgage payment or do I continue my marketing? So
that's a tough decision.
Jason, I think that was probably a similar toughness. Do I continue to work an environment where we don't like, or do we move in with the folks, you know, as painful as that was? I mean, I'm not sure which was more painful, but I remember it was really, really painful because I never forget showing another realtor's home, and I knew going into it was going to be a short sale. It's a short sale situation. And then he answered the door, and I thought, oh my God, how embarrassing would that be to be somebody who everybody knows in the real estate industry who looked at as successful. He's a short sale. And then 6 months later, I'm in those same shoes. That was really a tough time. And the reason I bring that up is it starts, I think, with acknowledging, okay, the market's different. Let's go ahead and be okay with that. It is different. You know, the future here for the next 12 months or whatever is probably different. So let's go ahead and face these adjustment thoughts, okay? I mean, let's review our expenses this month. I mean, you're teaching this week a class on business planning. One part of that is reviewing your expenses, right? Being real with them. I mean, we can pretend like they don't exist because out of sight, out of mind, or we can go ahead and be proactive and recognize that, okay, I need to make some adjustments. I can't continue this particular marketing thing maybe because after 6 months I don't see any result. I need to maybe adjust that or put those dollars somewhere else. You know, we need to save more than maybe what we did before. We need to, you know, again, watch that overhead situation. We need to secure a credit line. I mean, that's a thought. I've done that in the past, you know. Well,
right now we had many people come to our all-in-one event, and really and the reason for that was positioning more real estate agents in a place where there was more success. and a brighter financial future for tomorrow as we navigate through today's, market. Now, it's not going to be the right loan for all households, but for those that it did fit, we got many calls, after that. Yeah. And you're positioning yourself for a brighter tomorrow, where before we had to make some hard choices, and we didn't think 2 steps ahead. And so sometimes, depending upon if you have the experience or not, I mean, when I first went through the downtime back in 2008, I didn't know.
Yeah.
I just knew I wanted to survive, and it's so funny. I heard a story that rumor went around that I didn't survive and I was squatting houses. I mean, it's so funny. Your competition can make up all these stories. I'm like, people should just write a book. And
she's a squatter.
I was a squatter. But no, I bet I saved every dollar. And you have to adjust, and that's what we can still do today. But again, it's easy though, from a marketing standpoint. You might be paying lead generation and this and that. Paper cost money, to buy donuts or, water, it costs money. Right. And so be very, intentional, strategic when purchasing items. You can get things on sale. I love buying things in bulk. You can have a champagne feel on a beer budget, like you can, and you can make it look great. You just have to think a little differently. And it takes a little bit of time, to maybe go to a store that you didn't want to or things like that. But there's opportunity out there.
So let's go back to that all-in-one. Connie and I saw the potential in it. And, for multiple reasons, the all-in-one, of course, you can explain it, but the bottom line is we have an equity line that we can draw from up to a certain amount of dollars. And I did it for a few reasons. One of them was, wanting to be positioned. The last time there was a market adjustment, I was selling when I should have been buying. Mm-hmm. Okay. And that was painful. I mean, that was just painful as hell. Another reason is, like I shared with Connie recently, I said, sweetheart, worst case scenario, we don't ever have to look at getting into a reverse mortgage, which is extremely expensive, because right now our equity will carry us the rest of our lives, if we just let it on the all-in-one mortgage. So right. I brought this up on the huddle call, or I expanded on it like you shared for a second. Our agents ought to be having conversations. I know this is not what we're really directed at but it is, because making money covers all these things. Okay. We don't have any problems that more leads can't take care of. Okay. Just be clear on that. We have no market conditions that more leads can't take care of. One of those is having a real conversation with somebody has got some equity about this all-in-one mortgage. Yeah,
if you have a primary home that has equity in their house currently, and you maybe have decided selling is not the wisest choice for you, but you want to have access to your equity for many different reasons. To maybe have future purchases, or just be there for a rainy day. To think that this loan was created back in 2005 and has never had one delinquency or a default on it. Wow. It saved people through COVID. They lost their homes and they were able to live for a period of time off of their equity and never were concerned, never had to do forbearances or anything like that. And so this is a huge win. But it is a first lien equity line that focuses on principal before interest. And it allows all money deposited into the loan to go straight to the principal, which reduces that principal, which you then pay only daily interest on for that particular month, which is a huge difference in comparison to what we know to be an equity line, where an equity line is just a full 30 days worth of interest. This is a daily interest calculation. So as your principal is down, you take advantage of paying less interest. When it ticks back up, because you have to take some money out for this or that reason, then you pay a little extra interest. And then it does truly, if used correctly as a true financial powerful tool, allow you the opportunity, if you want to have your mortgage paid off very organically in 7 years. That's the average, 7 years. Now, other folks look at it, they want to create lots of momentum right now. Let's say when transactions come in, it lessens it. Then there's no transactions for 2 or 3 months. It's okay. Your interest is swept off of your equity for those next 3 months. So it's a win for the folks that are truly self-employed, and many other individuals that have great income coming in at certain times that can help guide them through the difficult times. But other folks create that momentum, and then when they have extra equity there, they definitely pounce on that equity to pay cash for something or a large down payment on another. And you can have up to 6 all in one. So you can purchase an investment property with 25% down. and have all your rents come in and pay your principal down in a quick fashion. You can use it on a second home as well. So there's multiple different ways that are winning for many folks. But this is a loan that is making a difference for many right now.
Yeah,
and it's not about rate either. So
I really think that people ought to be having conversations with their clients, their past clients, because you're going to be a hero, a superhero. If somebody had, if my realtor had told me about this and I said, well, let me investigate that a little further, or they pointed me in the right direction, and then I went that way, that realtor would, or that messenger would be a superhero. I guess that's why you're my superhero.
There you go. I'm the messenger. Yeah. And there's multiple people that talk about this program. Just know that CMG, it's called the all-in-one for a reason. We bundle your personal finance with banking. And so you receive a checking account, a debit card, the checks, all the things. It's mobile banking. It's everything tied into one. So it's really more of a financial tool to help you really create a brighter financial future.
So review your expenses this month, save more, reduce your overhead, secure a credit line. This is one way to do that. Pay your taxes on time. Guys, I know the temptation as a self-employed person. Yeah. I've been there before. I'll never forget, I won't go into the gory details, but I'll never forget accepting, and during a divorce of mine, a small amount, okay? I think it was like $2,000. That was part of the trade-off. Not knowing that person had maybe not told the whole truth and nothing but the truth when she was sharing her expenses. And when I came in and got audited, then the IRS said, well, that $2,500 is really $25,000, but because you haven't paid it for 3 years, now that's $50,000. Anyhow, it turned into $50,000 that I owed, all because I wasn't being prudent on that. So pay your damn taxes.
Yeah.
Right?
Well, let me share the other side of that story. So it's very easy for that to be snowballed, right? 1 year, 2 year, 3 year. We see it as lenders. I mean, there's people, whether you're self-employed as a real estate agent or just your basic small business owner. I mean, you see it a lot, but I joined
No one else
forces.
could charge that kind of interest, by the way. Nobody else could, but I'm sorry.
Yeah, but I joined forces assuming that this well-known, real estate agent, and I went into business with that individual, and I was in my mid-20s, so I'm just trying to learn and all the things, and bought a house and looked to refinance that home and take him off the loan at the time because it was an investment purchase at the time. And then that's when we had to move our family into that particular home, or my family into that particular home. I got a call from the title company and says, hey, I need to come see you. That's never a good sign when the title attorney says he needs to come see you, right? And it sits me down and says, hey, so there's a little bit of a situation, but there's $175,000 federal tax lien added to this property because that individual was on the deed at the time, right? And so it can snowball really fast. And if you do not pay your taxes, the government will come after all things that you own and attach liens to it. And so it took a long, long time for me not to have to pay that bill, right? Because it was attached to a property that I particularly own. So yes, I think goes back to what we talked about, saving money on savings, saving money for your taxes. And I've known many people, they call me on how to get themselves out of the bind that they're in, because they forgot to pay, or didn't forget, they knew, and they thought they could just make it up tomorrow, make it up tomorrow. Well, look at the folks that thought they could make it up tomorrow, as in now, and now the market is what it is, right? And so really being prepared is going to help your sanity as well as making sure that the government doesn't come after anybody.
So these are the don'ts that you don't want to do. Don't live off your credit cards, as Jason brought up earlier. Don't become over leveraged. That means, don't be over optimistic with, other investment properties right now. If you need to adjust, unless you got deep pockets, that's cool. Don't neglect tracking and assessing your marketing expenses. Pay attention now to those things more than ever before. Okay. If after 6 months they're not paying for this themselves, then you might want to adjust that or reallocate that to something else possibly. Don't combine your marketing budget with your operating account. That's a big no-no. And number one on the do things is to do these things now. Make these changes now before we go any further into the market, I think,
Yeah, preparing ourselves for the what if. We just don't know what tomorrow can bring, Yeah,
very solid points of advice.
Anything else on that, Jason? Again, I know this is fresh in your mind, all these kind of things.
Yeah, I mean, I can't say enough about tracking at all. I just can't say enough about it because it it makes or breaks you. And you know, these last few years, and I say few because this even goes beyond 2020, is, you know, the market was forgiving for laziness. Now it's going to expose those who don't know their business.
Yeah. We wouldn't have had this conversation on these topics, 6 months ago, because the market was forgiving. Now it's not, and we can pay attention to that and be proactive, or we can be a statistic like me and talk about, I shouldn't have done that,
Right.
So learn from the old guy's experience.
Yeah, and take advantage. I mean, as we navigate into the holiday season, we want to spend money, right? I mean, that's just our giving heart. That's what we want to do. And sometimes you just have to think 2 steps ahead. So you are going to, that's your nature. That's what you want to do. So think about how you can position yourself without, like you said, over leveraging. Utilize those lines of credit, the tools that are available for you. A lot of the lines aren't based upon interest rate. It's about a bigger picture. And so don't get tongue tied over certain rates and things like that. Just work with true professionals that can guide you in the right direction.
Amen.
Good stuff.
Thank you.
Thanks again, everybody, for joining us. We can't wait to have you come back. You've been listening to the talk of Music City Real Estate.